In this presentation, we will continue on with our comprehensive problem related to nonprofit organizations. We have the information on the left-hand side. We're entering that information in the blue area on the right-hand side. Last time, or the last two times, we had entered information in regards to the transactions for the period. Then we entered the reallocation of the expenses as well as the net release of assets after we have completed whatever the restriction was for the net assets being restricted. Now we're going to go into the closing entries. So we're going to go into the closing entries. Now this might be a little confusing the way the format is, but I hope it'll make more sense. It's going to give us more information. You'll recall that we entered the transactions up top into this trial balance up top in column 1. And then we took these end balance numbers and we copied them down here so that we had this second set of trial balances, the beginning balance of which is the ending balance of the first trial balance. The reason we did that is so that we can make this allocation with the expenses, and you can see a trial balance that has the reallocation down here of the expenses by category of public health, community services, management in general, and fundraising, and still have the breakout of the detail, as we could see up here, breaking out by expense, as would be normally what we would expect in a for-profit type of organization. We're going to do the same type of process now. We're going to copy this item down, and we're going to go down here and make that the beginning balance for our closing entries. Same reasoning here, because this will give us more detail that we could see. We could see this reallocation. We could see then the income statement accounts with regards to the reallocation by category, and the reallocation up top by expenses, the more traditional component. And now in the closing entries, we're going to take these items, we're going to close out. This is our beginning numbers. We're going to close out as we normally would in a for-profit organization, the temporary accounts, which are those what would be mainly the income statement accounts, statement of activity accounts here, the dark blue accounts, what would be under what would be the equity section in a for-profit organization, what would be under, in this case, the net assets section. So here's the net assets. Here's all the other income kind of statement accounts, the temporary accounts, the ones that we need to close out to the net assets, what would be similar to the equity accounts. Now, in a for-profit organization, it's also often taught that this is done in 4 steps: closing out revenue, then closing out expenses to a clearing account income summary, then closing out income summary to the retained earnings or capital account, and then closing out draws or dividends to retained earning or capital. But of course you could do that in one step as well, closing out the entire income statement. Here we have a different kind of set of problems, and that is that we have these 2 allocations that we need to close out. One, for net assets, we need to close out net assets with donor restrictions and those without donor restrictions. So we got to go through here and we got to deal with the fact that we have this donor restriction stuff with our closing process so that we can then allocate them properly into the proper kind of equity equivalent accounts, net asset accounts, with restrictions and without. So first we're going to deal with the ones without restrictions, because and we're going to close out the whole thing. We're going to close out the contributions without restrictions, kind of like the income statement number, and then we're going to close out the expenses in the same transaction. We're going to close out these. This will be like kind of like the one-step method in a for-profit organization. We're going to do more than one step because we have to deal with this new kind of thing of the with restriction and without restriction. So we'll close these items out first, and then we're going to close them out to this account, net assets without donor restriction, which would be kind of like the retained earnings account if it was a corporation, or a capital account if it was a sole proprietor or a partnership. Okay, so let's go ahead and do this. We're going to say that this is going to be number 11. And we're going to say that we have the contributions without donor restrictions. And that's going to be, I'm going to say negative of this number. It's going to be the same kind of thing we did last time in the last presentation, where we don't want to pick up this number. We want to pick up this number. Then we're going to post here to close it out. This number then will be 0 once we do so. So we're going to pick up the negative of that number. And then we're going to pick up public health education, and next we have community service program. Then we have the, what's next? The management and general, and then we have the fundraising items, and we're just going to do the same thing. I'm just going to say negative of the public health education. Actually, that should be a credit, however. It's going to be in column M, not column L. Negative, and then we'll pick up the public health like so, and then we're going to say negative the community services, negative of the 64,252. Next, we're going to say negative of the 64,262 next one, and finally negative of the next 264,252. Okay, so then there's a difference. The credits adding up to the 321,260, the debit adding up to 237. Therefore, we're going to need a debit. I'm going to be on the debit side. I'm going to use the negative sum function, the plug function, negative SUM. And then we're going to highlight these ones and enter. And that account is going to be kind of like the retained earnings, kind of like the capital account if it was a for-profit type of organization, company, or sole proprietor. But this time, net assets without donor restrictions. So there we have it. Okay, so now let's post this out and see if it does what we expect it to do. What do we expect it to do? We expect it to have these accounts go to 0 because we're closing them out, and then the balance going into the net assets account. Okay, so cleared that up. Let's do it. We're going to say contribution without donor restrictions. That's up top. That's going to be in Q77 equals. We're going to pick up that 237,000. That brings it down to 0, of course. And then we're going to pick up the public education health program. Public education health program, that's in Q79 equals. And then we're going to pick up that 128,504, bringing it to 0. Next, we're going to have the community service program. So that's going to be underneath. We're going to say community service program in Q80 equals. And we're going to pick up the community service program, bringing it to 0. Next, we've got the management and general. Management and general, that's going to be the next item in Q81. So we'll pick up that 64,252. Then we have the fundraising. So we're going to pick that one up, fundraising. And that is going to be equal to that 64,252. And then finally, so these go to 0, as we would expect in a closing process. And then we're going to post the difference to the net assets without donor restrictions. Net assets without donor restrictions. Now it's kind of like it's flipped here. We would expect it to be a credit, but it's not in part. But don't worry, because we're going to close out these ones down here, and it hopefully will then flip it to a credit balance. So right now it's a debit, but we're still hoping that it'll be a normal credit type balance, which we would expect in a capital kind of account or an equity type of account, a net asset type of account in the case of the not-for-profit organization. Next item, I'm going to make them yellow this time. We're going to be picking up this one, the one with the restriction, contributions with restrictions, kind of like the revenue account, but with restrictions. And then it's going to be closed out to the net assets with donor restrictions. So that's pretty straightforward. We'll make that a new journal entry. I'm going to put this under number 11 here. And so number 11 is going to, on K74, is going to be equal to this contributions with donor restrictions. And then we're going to have the debit, I'm going to say an L74 negative of this number. And that's going to be the 363,160. Then we're going to credit it, putting it into kind of like the equity equivalent type of account. But this time the net assets with restrictions as opposed to the ones without. And so there's the debit, there's the credit. Let's post it out. We got the debit up top. We're going to scroll over to cell Q78 equals, and we'll pick up that debit of 363,160, bringing it down to 0. And then we've got the net assets with restrictions. That's in cell Q76. We'll pick up that amount, and there we have it. That brings us back in balance down here. So now we've closed out those items, and the only things we have that are not closed out now, of course, are these two items down below. And we'll close them out just as you would expect. This is net assets released, satisfaction of purpose restriction without donor restrictions. So the one without donor restrictions, we're going to close out to up top without donor restrictions. The one with donor restrictions, we're going to close out to with donor restrictions up top. So this is kind of a new item. This might look a little bit confusing to us. So let's think about it. We're going to say, all right, this one has a credit balance to it. We need to debit it to go down to 0. So we need to debit it to go down to 0. I'm going to say this is the next 11. So I'm going to say the top one is going to be a debit to go down to 0. And it's the one that has without donor restrictions. Therefore, it's going to be closed out to net assets without donor restrictions. So the key words with and without here, of course. So it's going to be a credit to the net assets without donor restrictions, which should put us back into a credit balance up top, as we said we were hoping that would happen, because that's what it should be. And so we're going to say negative of that number. It's going to be for the 128,504 debit and credit. There we have it. Now let's go ahead and post this. We're going to post this out. So we're going to be down here in Q83, where we will say equals, scroll over and pick up that 128,504 and enter. It brings it down to 0. Then we want to go to the net assets without donor restrictions. That's in Q75. I'm going to double click on it because something's in it. Plus, and then point to that 128,504 and enter. And that brings us into the negative balance that we would expect. So that looks good. Next one says that this one has a debit balance and we need to make it go down. So we are going to credit this one to make it go down. It's with donor restrictions. Therefore, we're going to close it out to net assets with donor restrictions. So we're on number 11. And this one's going to go, we're going to credit it. So I'll put it on the bottom equals this credit. And it's going to be a negative of this number, which is obviously the same amount. And this is where the allocation is between the, the net assets with and without the donor restrictions. And then the debit is going to go to the equity similar type of account, but this time to the net assets with donor restrictions. So there we have it. Let's post this out. So we are going to go to net assets with donor restrictions. That's in Q76. Double click on it, go to the end of it, plus, and then point to the debit and enter. And then we are in the net assets. We're going to go down here to Q84 equals, pointing to that 128,504 and enter. And there we have it. So now we've closed out all the temporary accounts, all kind of like the similar to income statement accounts, the statement of activity types of accounts. Those are all at 0. And we have our post-closing trial balance. Then we're ready for the next time period. In essence, we only have, in essence, the balance sheet type of accounts, assets, liabilities, and what would be equivalent to equity, the net asset type of accounts. Of course, this remains in balance here. Now, next time, we're going to go to the creation of the financial statements. And we're going to kind of jump around from these 3 trial balances to pick up our financial statement type of information. We'll see you there next time.